Can you imagine this? The US government now faces the risk of having to refund up to $1 trillion, potentially the largest tariff repayment in American history. It all stems from tariffs imposed by Donald Trump, targeting nearly all imports, from steel and aluminum to consumer goods, under the justification of protecting domestic manufacturing and pressuring trade partners. But now, the Supreme Court may rule that these tariffs violate the Constitution or exceed presidential authority. If that happens, Washington would be forced to pay back everything collected over the years, possibly reaching $1 trillion, more than 1/20th of US GDP. This isn't just a burden on the Treasury. It could shake global financial markets and investor confidence. A seemingly technical legal ruling could turn into an economic earthquake with ripple effects across the entire international trading system. The big question, can Washington find a political solution to avoid this shock? Or is America heading straight into one of the largest budget crises in modern history? At the start of 2025, Donald Trump, back in the White House, launched what he called reciprocal tariffs, slapping duties of 10% to 50% on nearly 70% of all U.S. imports. He declared the trade deficit a national emergency, warning that unchecked imports were eroding American competitiveness and threatening economic security. To enforce this, Trump invoked the International Emergency Economic Powers Act, IEEPA, of 1977. A statute typically reserved for sanctions or foreign crises. The move triggered immediate backlash. Importers, trade groups, and even states filed lawsuits, arguing the president had overstepped constitutional limits. Under the Constitution, taxing and regulating commerce rests with Congress, not the executive branch. The dispute quickly escalated beyond economics into a legal showdown between the White House and America's legislative and judicial branches. On August 29, 2025, the U.S. Court of Appeals delivered a landmark 7-4 ruling, striking down most of Trump's tariffs as unlawful. It wasn't the first blow. The Court of International Trade, CIT, had already reached similar conclusions, setting a dangerous precedent for the administration. At the heart of the case was how to interpret IEEPA. For over 4 decades, it had only been used for sanctions and national security emergencies, never as a blank check for a president to impose global tariffs. The court stressed that such an expansion would break America's separation of powers, a cornerstone of its political system. Still, it delayed the ruling's enforcement until October 14th, giving the White House time to appeal. The final showdown now heads to the Supreme Court, whose decision could reshape the balance of power between branches of government and reorder the global financial and trade system for the next decade. Amid the mounting uncertainty, Treasury Secretary Scott Bessent went on NBC with an unusually blunt warning. He admitted that if the Supreme Court sides with the lower courts, the government would have to refund about half of all tariffs collected since the policy began, a direct blow to federal finances. By late August, the Treasury had already taken in $210 billion. But, Bessent warned, that's just the tip of the iceberg. If tariffs continue through the summer of 2026, revenues could climb to $750 billion to $1 trillion. In the worst case, Washington could be forced to rewrite the largest unplanned expenditure in modern U.S. history. Bessent didn't sugarcoat it. He called the scenario bad for the Treasury, even a financial disaster. The damage wouldn't end with a ballooning deficit. It could unleash a domino effect. Spiking bond yields, shaken investor confidence, rattled financial markets, and a serious threat to the macroeconomic stability of the United States. Trump's tariff policy has produced sharply mixed effects on everyday life and the broader U.S. economy. Ordinary Americans have carried the brunt of the burden. Import prices on food, electronics, and building materials have surged, forcing households to spend an average of $2,400 more each year, essentially a hidden tax on the middle class and working families. Contrary to promises of protecting industry, since April, the U.S. has lost 42,000 manufacturing jobs as companies slash staff in response to higher input costs and weaker exports. Wages in the sector have been virtually stagnant, rising just 10 cents an hour in August, not enough to offset inflation. And the trade deficit in 2024 still reached $918 billion, up 17% from 2023, showing tariffs have done little to improve the balance. Yet the White House paints a rosier picture. GDP rose 3.3% in Q2, stock markets hit record highs, and Trump claims tariffs are drawing trillions in new investment into the U.S. But many economists warn this is only a short-term win with long-term costs. Higher living expenses, shaken market confidence, and ballooning public debt, leaving America's growth on fragile ground. If the administration loses at the Supreme Court, Trump still has fallback options. One is Section 232 of the 1962 Trade Expansion Act, which allows tariffs if imports threaten national security. He used it in his first term to tax steel and aluminum, citing the need to protect strategic supply chains and defense industries. But this workaround carries risks. Relying again on national security could invite charges of abusing the law for political gain. Even Treasury Secretary Scott Bessent admits such a move could weaken America's credibility in trade negotiations, as partners would question Washington's transparency. And trying to re-legitimize tariffs through alternative laws could further spook financial markets, already jittery at the prospect of massive refunds. In short, this backup plan is a double-edged sword. It may preserve tariffs in the short run, but at the cost of America's long-term economic and political credibility. The tariff saga also extends far beyond Washington. Major trading partners like Canada, Mexico, China, and India are watching events unfold like a high-stakes chess match. If the Supreme Court strikes down the tariffs, an immediate reversal could play out. Exporters, once squeezed by U.S. duties, might suddenly reap windfalls from hundreds of billions in refunds. That could spark new waves of bilateral trade, but would also force global supply chains to readjust abruptly to the new rules of the game. Economists warn this is not just America's problem. As the hub of the global economy, any shift in U.S. trade policy reverberates worldwide, from Wall Street stocks and cross-border capital flows to production lines and consumer markets across Asia and Europe. A $1 trillion refund could trigger a global trade shock, powerful enough to redraw the map of international commerce for years to come. Now, all eyes turn to the Supreme Court, which will soon deliver a decisive ruling on one of the most controversial trade policies in modern U.S. history. If Trump prevails, he won't just cement his tariff strategy, he'll secure unprecedented power to invoke national emergency and unilaterally tax the global economy, stretching executive authority far beyond past presidents. But if he loses, the opposite scenario explodes. America could be forced to refund up to $1 trillion, straining federal finances and shaking global investor confidence. The fallout would ripple well beyond U.S. borders, throwing supply chains and trade partners into chaos. This is no longer just a legal battle, it's the ultimate stress test for America's separation of powers between Congress, the courts, and the White House. And the unanswered question looms large. Is this truly a strategic move to defend America from foreign trade pressure, or merely a political gamble whose cost may ultimately be borne not only by Americans, but by the entire world?